stock market is really in a free fall. And, anyone who's invested is probably feeling the tremors, but especially anyone invested in tech. The tech-heavy NASDAQ plummeted nearly 4%, and that's a 6-month low. Now, this isn't just, a random blip. The S&P 500 and the Dow Jones Industrial Average are also seeing some substantial drops, but NASDAQ is definitely taking the biggest hit. So if you're enjoying this deep dive so far, hit that like button and subscribe for more. Now, let's think about some of the big players in tech like Nvidia, Apple, Microsoft, all taking a pretty big hit, with Nvidia seeing a really steep decline. What's interesting is that Nvidia's drop isn't really isolated. It's been on this downward slide for a while now. So this kind of suggests that there might be some deeper issues either within the company itself or even maybe even the whole sector. And it's not just, a few random tech companies either. The Magnificent Seven stocks, which are kind of like the heady hitters of the tech world, are leading this sell-off. So this is kind of telling us that investor confidence in the tech sector as a whole is, kind of shaky. So why the sudden panic? Well, there are a few things at play here. First, President Trump's recent comments about the economy haven't really, inspired much confidence. He's refused to rule out a recession, and he's been talking about a period of transition, due to his policies. And transitions can be good, they can be bad, but the fact that he's not dismissing the possibility of a recession is making investors feel really nervous. The market reacts very, very strongly to any kind of pronouncements from the president, especially when they hint at, economic uncertainty. The ongoing trade war with China is also adding to this anxiety. They just slapped new tariffs on U.S. agricultural products. And this is on top of all the tariffs the Trump administration has already imposed on Chinese goods. This back and forth tariff battle is really, intensifying worries about a potential economic slowdown. And just to add fuel to the fire, Canada's new Prime Minister Mark Carney, he's expected to take a really hard line on trade negotiations. So this is injecting even more uncertainty into an already very volatile global trade environment. And how do we actually measure this exactly? Well, there's an index for that. It's called the CBOE Volatility Index, or VIX for short, as basically a fear gauge for the market. Right now, it's at its highest point since December. So this tells us that investors are feeling really, really uncertain about the future. So who is getting hit the hardest in all of this? It's the growth stocks. These are companies that are expected to grow at an above average rate, compared to the market. And they're often seen as riskier investments. So when the market gets shaky, investors tend to shy away from risk. We're seeing this play out with the Innovator IBD 50 ETF, which tracks a basket of growth stocks. It's taken a substantial hit, and this really demonstrates how widespread this negative impact is on this particular type of stock. It's a good reminder that while growth stocks have the potential for high returns, they're also much more susceptible to market downturns. And this is something you really need to consider when you're thinking about your investment strategy. Now let's take a closer look at some of the specific companies that are making headlines because of their plummeting stock prices. Palantir, which is a data analytics company, has fallen dramatically from its recent highs. It's really a stark contrast to its previous success, and it highlights just how unpredictable the market can be. Tesla, which is the electric vehicle manufacturer led by Elon Musk, has also wiped out all of its gains that it made after the election. And this is partly due to concerns about CEO Elon Musk's political involvement, and you know how that might be impacting the brand. Then there's Novo Nordisk, which is a Danish pharmaceutical company. Their stock has plummeted following some disappointing results from a clinical trial for a new weight loss drug. And this is a good example of how company-specific news can really send shockwaves through the stock market, especially in sectors like pharmaceuticals, where success really hinges on the outcome of clinical trials. So what's next? Well, all eyes are on the upcoming economic data releases. The February Consumer Price Index, which measures inflation, will be closely watched, as will the Producer Price Index, which measures wholesale inflation. These reports will give us a better understanding of whether inflation is picking up or cooling down. We'll also be looking into University of Michigan Consumer Sentiment Report to get a sense of how confident consumers are feeling about the economy. All these data points will be really, really crucial in helping investors, assess the market's direction. This week is going to be a really big one, so buckle up. The market turmoil that we're seeing right now is really a reflection or perfect storm of factors. You've got trade tensions, you've got fears of a recession, and you've got company-specific news all swirling together. And this is creating this, really volatile atmosphere. To really understand the depth of this situation, let's take a closer look at what happened on Monday. The NASDAQ spearheaded a huge sell-off among Wall Street's major indexes. It plummeted almost 4% to a near 6-month low. And this decline was largely fueled by fears that this escalating trade war with China could potentially trigger a global economic slowdown. Now, not surprisingly, technology stocks were among the hardest hit. Giants like Nvidia, Apple, and Microsoft all experienced drops ranging from 3% to 5%. And these companies were really the main anchors dragging the index down. It highlights just how vulnerable the tech sector is in this current climate of uncertainty. Remember that fear gauge we talked about earlier, the VIX, it surged to its highest point since December 18th. This spike is a very clear indication of the heightened anxiety and uncertainty that investors are feeling about where the market is headed. And to make matters even worse, President Trump's refusal to rule out a recession just added more fuel to the fire. His comments about the economy undergoing a period of transition because of his policies really amplified concerns about the future. His attempt to reassure investors by saying you can't really watch the stock market. If you look at China, they have a 100-year perspective. Well, it really fell flat and did very little to calm the nerves of, people who are watching their portfolio shrink. The ongoing trade war, particularly the new Chinese tariffs on a whole bunch of U.S. agricultural products, is really intensifying the situation. These tariffs, which came into effect after the Trump administration doubled tariffs on Chinese imports to 20%, have really heightened worries about a potential economic slowdown. Adding another layer of complexity to this whole trade war saga is Canada's new Prime Minister Mark Carney. His anticipated hard line on tariff negotiations is injecting another dose of uncertainty into an already very intricate and volatile global trade landscape. This combination of trade tensions and economic uncertainty has created kind of a perfect storm for the stock market, and growth stocks are right in the eye of that storm. They're known for their higher risk and their potential for rapid growth, but they're also the most vulnerable during sell-offs. The Innovator IBD 50 ETF, which we discussed earlier, serves as a key benchmark for growth stocks and has plummeted almost 4%. This really underscores the severity of the situation and indicates a broader trend of risk aversion among investors. They're fleeing to safer havens amidst all this market turbulence. Adding to the overall gloom are a number of high-profile companies that are experiencing some pretty substantial stock plunges, driven by a confluence of different factors. Palantir, the data analytics company that we mentioned earlier, has seen its stock price taking 8% nosedive, and this has wiped out a big chunk of its recent gains. This decline is likely due to a combination of profit taking after a period of really strong growth and also just again to some emerging concerns about the company's long-term prospects. Tesla, the electric vehicle manufacturer headed by Elon Musk, is also feeling the heat. Its stock has tumbled more than 8%, and this has wiped out all of its gains since the election. And this is sparking some worries about its future performance. This drop is attributed to a number of different factors, including the intensifying competition in the electric vehicle market, the ongoing production challenges, and then also growing concerns about Elon Musk's focus and commitment, given that he's involved in so many other ventures. Novo Nordisk, the Danish pharmaceutical company that we talked about earlier, has also been hit hard. Its stock has plunged almost 10%, and this is following those disappointing results from that clinical trial for a new weight loss drug. This setback is a stark reminder of the inherent risks that are associated with investing in pharmaceutical companies. Where success often hinges on the very unpredictable outcome of clinical trials. As investors try to, navigate this turbulent market landscape, they're really laser focused on these upcoming economic data releases. The February Consumer Price Index, the Producer Price Index, and the University of Michigan Consumer Sentiment Report will be super important in providing insights into the health of the economy. These reports will be very closely scrutinized for any signs of inflation or slowing growth, or even weakening consumer confidence, any of which could further impact market sentiment. In addition to these economic indicators, investors will also be keeping a close eye on the ongoing trade negotiations between the United States, Mexico, and Canada. The outcome of these negotiations could have a really big impact on market sentiment, as any kind of escalation of trade tensions could further dampen economic growth prospects. So as we wrap up this deep dive into the current market volatility, one thing is definitely clear: we're in a period of heightened uncertainty. Trade tensions, fears of a recession, and all this company-specific news are all converging to create this really volatile market environment, and it makes it really hard to predict where the market is headed. Staying informed and really carefully monitoring economic data, corporate earnings, and geopolitical developments will be crucial for investors as they try to navigate this challenging environment. If you found this deep dive helpful, please hit that like button and subscribe for more insightful explorations of the topics that matter most. Remember, staying informed is absolutely key to making sound decisions, especially during times of market volatility. So until next time, keep a close eye on the market and stay tuned for more deep dives that will help you make sense of the ever-changing financial landscape.